geopolitics are almost always a buy the dip, by the way. And it's always painful to say because everybody sees every war as like, this is going to be the recession. This is it. The nukes are going. Which it is possible that Iran is secretly building a nuclear weapon in 𝗧𝗧𝗡𝗃𝗧𝗧 Mountain, but really...
What percent?
I would give it about an 8% chance that they one day just like, in 1 in like 12 realities, they just wake up one morning and go, "Sup, bitches, we got a nuke." And it's like, open up the strait, otherwise we're lobbing it. We're just going to lob it. Go ahead, shoot it out of the sky. Guess what's going to happen? A lot of people are going to die. All that radioactive material is just going to go blow over Europe. Yeah, so like 1 in 12 realities.
You give that an 8% chance.
Yeah.
That's the equivalent of, by the way, someone at a craps table basically rolling like a 10, which can happen multiple times in a row.
Yes. Yeah. Well, I mean, look into 𝗧𝗧𝗡𝗃𝗧𝗧 Mountain is what I would tell your viewer, because it's the one that we didn't strike when we did Operation Midnight Hammer with the B-2 bombers, and it's the one that we have not struck during this last operation. Why? Meanwhile, they're still building it. It's weird. It's too deep. I think it's way too deep. Like, they built it probably twice as deep as the last ones, and our bombs can't reach it.
And you think America knows about this?
Oh, yeah. I think they know that's also where the highly enriched uranium went. Because we saw in satellite imagery trucks, it's not a lot, but the 460 kilograms of highly enriched uranium that Iran has, we saw trucks back up to the various different facilities that were enriching. And, you know, if you read between the lines, they moved it. And they probably moved it to their deepest facilities.
How do you know about this?
It's everywhere. You can Google. Yeah. I mean, you have to kind of look for it because it's not the sexiest, like, front page news. So what I do is, this sounds really weird, but I still read the newspaper, like the physical newspaper. And it's usually on like B7, you know, in the back of the newspaper. And it's like, 𝗧𝗧𝗃𝗧𝗡 Mountain exposed. And it'll be in the New York Times.
You know, it's interesting. Tim Dillon had a whole rant about this. And he just said, it's not good news. Just details like this. It just, it doesn't make for good news. They want the clickbaity headlines of this and this. But
like 𝗧𝗧𝗃𝗧𝗧. Yeah, of course. Oh, of course. Oh, yeah. Yeah. And that's the struggle, especially now with like, I mean, it's one of the reasons I turned my phone on like grayscale is I can't go on X without getting distracted by like, oh, damn, look at that police shootout. You know, it's like, dude, I can't work anymore with what I see on X. Or I open up Instagram and it's boobs, or I open up, you know, TikTok and it's aviation, or worse, it's female fighter pilots flying.
So you know it's based on your viewing preferences, right?
Nope.
Because I definitely don't get boobs. I get reef aquariums and Rolex watches on my
dudes.
Instagram.
Wow.
Just bodybuilders, man.
Just abs.
So getting back to the rally here, is it justified and what's causing it?
Yeah, partially. So during the geopolitical crisis, you had valuations tank, especially at companies like NVIDIA and AMD. So I like to look at companies on what I call a forward growth basis. And so without getting too granular, basically, what's its valuation? How much money is it earning? And then I divide that by its future growth rate. How much do we actually think they're going to grow earnings by? I think that's really important because you're going to see companies where you'll have like a Palantir. People are like, oh, that's 100 forward P ratio. That's too high. Okay, but they're growing earnings at 40% a year. So you're trading for like 2.5 PEG or whatever. And for software companies, that's usually actually totally fair. AMD and NVIDIA, which are even better than software companies, they just design chips. They don't make the chips. They just design them. Their margins are through the roof. NVIDIA claims AMD in margins, but anyway. So we had a thesis that hardware would boom because earnings season was coming up and the valuations were low, and there's no sign AI is rolling over yet. One day, Michael Burry will be right. You know, we all know these depreciation schedules are crazy, or the circular investments. Like, you saw the Cerebras IPO? Like, basically, quick example, somebody's trying to reinvent the mousetrap, make a different server chip. They go IPO. But the only way they could IPO is if they show U.S. revenues. So how do they show U.S. revenues? They call up one of their big investors, who happens to be the president of the board at OpenAI. So OpenAI gives them a $20 billion contract. Oh yeah, we'll use your chips. And now that guy probably is the one who set it up. Now they can IPO the company. Company goes in IPOs. That guy gets rich. He got probably essentially set up the deal, right? This is the oversimplifying the circular flow. That's like a 30-minute video on its own, right? Oversimplifying. But the point of it is, there's no sign that that's stopping yet. So low valuations combined with a lot of people sold a lot of stock during the Iran crisis. I mean, Ross Gerber came on, and I love Ross, but when he's like, oh yeah, Kevin, we're telling everybody, raise cash right now. I'm like, dude, if everybody's raising cash right now, everybody's just going to plow into the market when it's green again. And so that's why we've seen this crazy rocket up.
So it sounds like you have to be a contrarian investor to a certain degree, which makes me think, too, if everyone is saying, sell. The market's overvalued to see some of the highest PE ratios in history. Schwab said the stock market is expensive by every single metric possible. And if everyone is shouting, we're overvalued, it makes me think the contrarian of that is, buy more.
Yeah, ironically, I agree with you. I actually think this is going to be the most frustrating rally ever, where people will look at 2026 and be like, how did this turn into another 2021? Where the gap between the bears and the bulls went astronomical. And some people just lost everything because they were bearish on it. And other people just made mega fortunes because nobody saw this coming.
So how should this apply then to the average person? Because you have a lot of people out there that are saying, that, oh, you should just buy like mutual funds, very safe investments, T-bills, like a standard diverse portfolio. And then you have other people like Chris Camillo that say, hey, you should allocate a sizable chunk, a meaningful amount towards risk capital, maybe like some IPOing companies, some smaller cap companies, higher risk companies. What do you think the average person should be doing? Let's just say you take like the majority of people, they're earning between, let's say like 40K and 200K as a family. I know that's a huge spread, but like how should they approach today's market?
If you're in that range, that 200 or 40 to 200, probably the best investment you could really make is trying to figure out how can you and your spouse increase your own income. There are people that I know that went from being a nurse and with overtime they're making $120,000 a year to saying, you know what, I'm going to go back to night school and I'm going to study to be an anesthesiologist. 2-3 years later, I do have to take on some debt, but 2 or 3 years later, they're like an anesthesiologist nurse instead of a normal nurse. And now all of a sudden they're making $400,000 a year. They're an independent contractor instead of a W-2 person. Now they get write-offs. They could write off all their side expenses. They could write off, whatever, their education, you name it. And so what's fascinating to me is there's so many opportunities to grow your skill set and make more money that's where I would focus first for most people. Then I would focus on owning my own home. And then I would focus on adding some risk assets in. The diversified portfolio, I think, gets really interesting when you're retired, when you're on that other side of the hump.
Okay, that's so interesting you say that, because what I've done is I have like maybe 10% of my portfolio in SPY. Everything else, virtually everything else is like QQQ.
Nice.
Or VUG, which is just like large cap. It's like top 100 stocks. A lot of people tell me that that's like ultra risky. But then you also have this other side of social media that are saying, there was this chart that I saw, and it was if you bought $100,000 worth of TQQQ, how long it would take for you to be a millionaire at a bunch of different years. So like the year 2000 all the way up until the year like 2020. And it was not long every year. Like maybe the longest was like 10 years. But even then, like people were, the returns of TQQQ are ridiculous.
Yeah.
What do you think about also the alternative side of like having ultra risky ETFs, like triple leveraged QQQ, which is like
Jack has a problem with hindsight bias.
Well,
he likes to say, if I bought NVIDIA 20 years ago.
I'm just saying, my QQQ portfolio has done pretty well.
Could have just as easily had
20% cash position.
I mean, in fairness, over the last 26 years, we've really had a technological boom, right? I mean, look at where we were with technology 20 years ago. I think Counter-Strike came out like 24 years ago. That was like, these were like your first video games, right? And we were running on, 8 megabit internet. If you had a T1 connection, you were lucky, and you moved from DSL to cable. That was lucky too. But anyway, so yeah, I mean, there is some hindsight bias there, but I actually think the SPY and the Qs that you said, great. I wouldn't touch triple leverage because I think as soon as we get our credit event, which will happen one day, some black swan, whether it's private credit or all this crazy off-balance sheet financing that's happening with like Meta and the big, the blue owls and the mega caps to finance their data centers, all that crap's going to implode one day. It's all going to zero one day. They're going to overbuild and it's all going to crash. And when that happens, TQQ is really going to suck. In fact, it'll probably go to 0, which you can't come back from 0. That's actually why the SEC just banned 5x leveraged
Oh
funds.
my God.
They had 5x. Why did I not know about this?
Jack
Oh,
would have been
man.
the buyer.
So they weren't available yet. So they banned it before they became available because it was getting so ridiculous. And if you look at just either the tariff shock or this Iran shock,
You would beat 0.
5x would already be at 0. They would have all already collapsed. So the SEC, did a good thing there. They stopped that because they would have already been at 0. 3x leveraged the next recession because we are so, we've never been through a real recession. Well, I don't even know that during COVID we had triple leveraged ETFs. We should look into that. But let's say we did. Absent COVID, because it was such a short recession, absent COVID, we didn't have triple leveraged ETFs in the great financial crisis. Back then, they would have all gone to 0.
So you would always argue, hey, don't touch the triple leverage ETFs.
No.
But you do think QQQ is fine.
Totally. Oh, I think QQQ is great. Love it. If you're going to buy it long term, get QQQM. There's a little trick. So slightly different, but their fees are I want to say half, or you should look into the fees. The reason is they advertise QQQ. So everybody who comes in from the advertising funnel buys QQQ because that's where they spread the name. Everybody who knows the financial advisors that they're trying to, also have used their product, they have QQM for them. And
I
it's a
had
lower fee.
no idea.
Yeah.
If you have a cat, you know that keeping them healthy is a non-negotiable. And a big part of that really just comes down to diet. By choosing a quality cat food, you're buying more time with your cat and giving them a happier, healthier life.
That's exactly why we are so excited to partner with Smalls. Smalls is fresh, human-grade cat food that does so much more than just feed your cat. It helps them live a full, healthy life.
Not only is Smalls healthier for your cat, but it also noticeably improves their energy. In fact, 88% of cat parents say that after feeding Smalls, their cat is softer and shinier and has more energy to play.
Smalls recipes are over 80% protein, which helps your cat build the muscle they need, and they never use fillers or artificial ingredients.
Personally, I found that finding the right cat food is really difficult because in my case, I have one cat that will literally eat anything. You leave any morsel of food on the table, it just will eat it. The other cat's extremely picky, but with Smalls, they both enjoy it. It's the perfect fix.
If you're ready to find your forever cat food, Smalls is perfect for you, and for a limited time, because you're a nice coffee hour listener, you get 60% off your first order plus free shipping and free treats for life when you head to smalls.com/iced. That's 60% off your first order plus free shipping and free treats for life when you head to smalls.com/iced.
Thank you again to Smalls for sponsoring this podcast.